Big tech earnings just wrapped up this week, and it's been a wild ride. From Meta Platforms shooting up by over 20% after one of the best earnings calls I've seen in a long time, to Google's mixed results from their search business and their ads business starting to get disrupted by large language models, and Tesla's terrible earnings call, which was so bad that we might stop calling them the Magnificent Seven and start talking about the Super Six. And of course, how all of these stocks are benefiting from major trends like generative AI, mixed reality, and a whole lot more. Your time is valuable, so let's get right into it. First things first, we're not here to keep you hostage. Here's everything we're going to talk about in this episode. Meta Platforms and their incredible earnings for 2023, Amazon and how they're benefiting from AI in some pretty unexpected ways, Microsoft's growth thanks to AI infrastructure and their co-pilots, Google's search and advertising revenue and how it's getting disrupted by generative AI, and Apple breaking their 4-quarter losing streak and what the Apple Vision Pro could mean for their future. And then we'll wrap up with our thoughts on Tesla's terrible earnings call and Nvidia's earnings, which are still to come.
So the first stock we're going to talk about is Meta Platforms, Alex. And I think Meta was the star of the show. We had the shares opening up 20% the day after earnings. Fourth quarter revenues jumped 25%. And we also saw expenses dropping 8%. If you combine those two things, you get really good results. So yeah, profits tripled. Meta announced their first dividend for the stock as well. So while the daily and monthly active users was fairly in line with expectations, but still a huge 3 billion users, what really stood out was the revenue that we're talking about. So $13.12 was what we achieved in terms of revenue per user. And the expectations were $12.81. And while that might not sound like a huge difference, multiply that by half the globe and you suddenly get earnings like we just saw. And it's a huge turnaround for Meta. What are your thoughts on Meta?
I think this last year was incredible for Meta. I think that's a good thing to remember is that back in 2021 and 2022, when they switched from being Facebook to Meta Platforms, there was a lot of uncertainty about all of their investments in the metaverse, and they were burning billions and billions of dollars every year. And then they wisened up. And in 2023, they invested a lot in efficiency, which means a few very different things, from restructuring the company internally to investing in AI, hardware, software, and tools. And now we're seeing the fruits of their labor beyond that into large language models, huge investments into AI infrastructure. They're training Llama 3 right now. So I think overall, it's an absolutely banger quarter and an incredible turnaround. Huge credit to Mark Zuckerberg. He's the one who pointed it towards the metaverse in the first place. But to his immense credit, he listened to shareholders, pulled a big 180, and now he's using all those same investments in artificial intelligence, which I still believe could one day lead to better investments in the metaverse when the time comes. And then the second thing is having 3 billion users around the world and being able to increase revenue per user through more targeted ads and all of these interesting AI services they're rolling out across their entire suite of apps, from WhatsApp to Instagram, Messenger, and Facebook itself. And then, of course, the Meta Quest. I'm just blown away by all the stuff they've been able to do in 2023. What do you think?
Yeah, I agree. And I think one thing that was a concern was targeted ads. Over the last few years, there's been like privacy changes by Apple and other things that had affected Meta. This is one of their core businesses. If you even think about their other applications in their suite of apps, it's all about advertising. The AI advances should only make that better. The ads are going to be more targeted, probably more dynamic. We spoke about how they might, be really generative on the fly in the future. These earnings came out just a couple of days, or I think the day after the video that you did around AR and VR as well. And that's a really interesting pivot, right? We talked about before it was metaverse, which was all about this whole new virtual world, completely different. Now it's more virtual reality, augmented reality, spatial computing, but Apple also getting into that game. Feels like we're changing with the focus there. We're still using a lot of that technology, but it's not about this virtual space we're going to live because our own lives are so bad. It's actually about how do we augment our existing lives and work life and just try and make it better with this new tech. So I agree, the TAM's expanding, Apple's validated the market. So Meta are really strongly placed.
I want to just focus in on 3 things that you said there that I think are all really important. So first of all, big companies can still get bigger. This is one thing we see in our comments all the time about how we're always talking about the mega cap companies, but those are the companies that are growing the most and running right now. Just look at Meta Platforms, up nearly 400% in the last year or so, maybe the last 15 months. The second thing I want to point out, we're seeing generative models, not just for generating text, but also generating 2D images, 3D assets, full-on movies, and so on, all of which can help populate virtual content and eventually the metaverse proper in the future. So I do think a lot of the investments that Meta is making in AI today will have an impact on the metaverse that they're still trying to build over the long term, right? I don't see that those two as two separate visions. I see AI for them as more of a next stepping stone onto their ultimate vision, which I do still believe is the metaverse.
Yeah, I agree. And what you just said is backed up by the fact that Zuck just put in an order for, was it 300,000 H100? So they're definitely doubling down.
350,000. Yeah.
I was too low.
Yeah. These GPUs are going to help them with their large language models and the other AI things they've got going on today, but also for sure a key part of their infrastructure for the metaverse down the road if they still want to do that. The third big trend that they're on the intersection of right now is mixed reality. So like you just said, the Apple Vision Pro really validating the mixed reality market, but because it's 6 times more expensive, these aren't really competing products. It's another NVIDIA AMD story. It's another OpenAI Google story. It's a story where we have one company, Apple, talking to the prosumer or even the industrial applications in the workspace where big companies are willing to pay $3,500 per employee for using this. And then the Meta Quest 3 coming in at $500, much more palatable for the average consumer if they want to get into this next era of spatial computing. So I think incredible position all around, riding the waves of AI, generative AI, and mixed reality, as well as using those things in the present for their advertising revenue. And I do think we're going to see a lot of AI bleed into that because nobody knows more about you than Meta Platforms from all the stuff that we've put on Facebook and Instagram over the last 15 years. So they're in a prime position to personalize ads and sell how to personalize those ads to you as they target you to third-party companies. This is a stock that we missed in 2023, much to our own dismay. I'm happy to be a shareholder of this company now. I have a small position in it, at least relative to my NVIDIA position, but what an amazing company to be holding now.
All right, let's talk about Amazon next. So Amazon had a fantastic quarter as well. Not quite as good as Meta's 20% share response, but the shares were up 8% after the results came out. Revenue growth of 14%. They basically had revenue of 170 billion versus expectations of 166. So they beat that nicely. And earnings per share of $1, whereas the street was expecting 80 cents. So nicely up, nice response. And the main drivers was really Amazon Web Services. So I think the previous quarter, it was 12% growth, but now we were back into 13% growth. So it's starting to reaccelerate. But just to put that in context, though, a year ago, we were talking about 20% growth for AWS. And then advertising, right? So advertising revenue, 14.7 billion, whereas the expectation was 14.2 billion. And I think, Alex, you found an interesting trend, haven't you, in the emerging AI tech world that you think might benefit Amazon?
The Samsung Galaxy S24 recently got announced with a feature called Circle to Search. And I've been thinking a lot about this feature because A, it's incredibly brilliant. So basically, if you don't know what's going on, Circle to Search is where you can draw a circle and at any point, whatever you just circled, it will search or reverse image search. So for example, if you're playing a Netflix movie on your phone, you can stop, circle something in the movie, like let's say a piece of clothing that you're interested in, reverse image search it, and know what it is on the fly. So that's taking something that's very complicated, in this case, taking a screenshot and reverse image searching it, which most people don't even know what that means, let alone how to do it, and making it like a one-step process that results in a search result. Why is that important? Because I think what a lot of people will use that feature for is I want to look like James Bond or my favorite James Bond villain, circle their outfit, reverse image search it. Where are you going to go buy that? Amazon. So there's going to be a lot more purchases as a result of new generative AI features or other kinds of AI features that simplify the process of identifying items or things that you can purchase in the media. Think of all the steps that Circle to Search saves. And now you can see why I think Amazon is going to be a huge beneficiary of that and other workflows that will follow in that same vein. So I think this is something that people aren't really predicting yet, but we should see an uptick in their gross market volume. because of AI features like this.
And then we get on to advertising from Amazon, right? And me and you have spoken about this before, but again, people probably underestimate this. I'll read the number again. $14.7 billion in this quarter was revenue from advertising, not for Facebook or like Google, but Amazon. $14.7 billion is the revenue they brought in. Just Amazon from advertising, which is 50% more than even YouTube adverts. And something you've spoken about before, Alex, as well, is that when a user goes to Amazon, they already have the intention to buy, which means the likelihood of them seeing a result, clicking it, and it generating revenue is just higher. So that's why probably they have a bigger impact. Maybe the adverts are not as obvious and we maybe don't realize them like we do with Google and Facebook and YouTube, but it's the core of Amazon's business. And that's a huge amount of money that they're bringing on just from advertising.
I think a lot of investors are still asleep on just how important advertising has become to Amazon and how good they are getting at it. When you go to Amazon, you already have an intent to purchase. You're there to buy something. So when you're getting advertising results, the rate at which those advertisements convert is much higher. Why does that matter? Because if they can personalize those results to you, that's only going to accrue to their benefit even more than at a place like Google or Facebook. Amazon's advertising revenue was 50% higher than YouTube's. This is a massive business segment for Amazon, and it's only going to grow, I think, on Amazon's platform, which is a walled garden. And I think if Amazon finds a clever way to expand off domain, now they're capturing a larger portion of that revenue because they can use techniques like personalization, but leading people back to Amazon. And then on top of that, one thing I'm really excited for, by the way, is seeing what Amazon shopping looks like in 3D. Like, I would love to put on an Apple Vision Pro and just go to Amazon when they have a mixed reality experience and see what that's even like. I think that is one of the sites that has the biggest chance to benefit from a third dimension. Kind of like you can infinitely scroll down in 2D right now, an infinite 3D digital mall where you can walk through and each section is like a custom search result to you, right? So I do think that there's a huge opportunity for Amazon to capitalize on the mixed reality market. And I'm excited to see if they do anything with that, and if they do, what it ends up being.
And I'm going to spend even more money on things I don't need from Amazon, I think, if that happens, just for the community. All right. So next up, another big mega tech company, Microsoft, which recently became the biggest company in the world, exceeding Apple in terms of their market cap. Let's take a look at their numbers. So the revenue was $62 billion, and it was up 18% from the previous quarter, largely in line with what was expected. And the forecasts were also pretty much in line, which is why overall there wasn't a massive movement in this stock. I was really looking at their earnings for the words Copilot. Copilot was not mentioned as a term in their press release. I found that strange. The only place I think I found it was in the Office 365 commercial area. So the Office 365 commercial segment, growth there was 17%. I think part of that is Copilot coming in, but I feel like at the moment it's probably a small part of that. So I'm going to keep an eye on that segment. And in the quarters to come, I expect to see more about Copilot. Of course, Satya mentioned AI on the call, but it was interesting that Copilot wasn't broken out.
I'm not sure if they'll ever end up breaking Copilot out into its own segment, right? So my understanding is Copilot is something that's going to get baked in across the board in Windows, in Office. There's one for GitHub, for example. So I think what's really going to happen is we should be seeing all of their business segments where they start baking in Copilots to start picking up even more market share. Why? Because when you are using something like Google Sheets versus something like a AI enhanced version of Microsoft's Excel, whichever Copilot helps you do more in that in that spreadsheet ecosystem is probably the one you're going to go with. So that's one example. Another example is at the operating system level. So Windows versus Mac, which ecosystem helps me do things in a more productive way? If Windows is about to bake in a Copilot that helps me do things across my apps in a way that's very productive for me, all of a sudden, I might be more inclined to stay with Windows. So I think what we really should be expecting from these Copilots isn't necessarily like a line item breakout, here's how much Copilots are making us, but more of a multiplier effect across the rest of their business segments where we see, hey, the Copilot is helping us pick up more market share on operating systems, more market share when it comes to productivity suites like Office 365. It's helping people use Azure more, and they're choosing Azure more over GCP or Amazon Web Services, all of which have their own generative solutions. So I'm really looking forward to see how the Copilot wars shake out to enhance the capabilities that we already know and love today.
Yeah, that makes a lot of sense, actually. But I want the introduction of Copilot, which we priced at $30 per user, has led to a 10% increase in our revenue or something like that. Maybe it's just too early because it's spread like horizontally across all of these different segments. It's going to be everywhere. It's going to be in LinkedIn as one of their platforms. Might be not called Copilot, but they'll have their own assistant there. We should be able to see and hear Satya talking about an increase or uptick based on this new technology in all of their segments.
I think that's still to come because, for example, I have the beta version of Windows Copilot, and I can tell you it's still pretty limited in its functionality, but they're rolling out more features. It's constantly getting better. And then that's going to come out of beta, and that's when they'll probably break it out and start talking about Copilots and their effects specifically.
Let's keep going with the mega cap tech companies. Alphabet reported on Tuesday there was 13% revenue growth, which was the fastest rate of expansion since early 2022. Cloud growth was 25%, but crucially, and we need to dig into this, there was concern about Google's ad revenue. And if you hear the words concern and ad revenue with Google, like that means there's trouble ahead. So in terms of their earnings as well, the revenues, they were in line, slightly above expectation. The cloud revenue kind of stood out in terms of 9.19 billion versus 8.94 billion. So that was really good. But really, Google's ad revenue, it actually declined. And I think what everyone has talked about as soon as they saw ChatGPT, oh my God, what's going to happen to Google? This innovation is going to affect Google's core business of ads. And it looks like that's starting to bite. So what are your thoughts around Google and ad revenue being at risk?
Yeah, I think this is just the nature of the beast, right? So much of their revenue comes from being a middleman between a user and what they're searching for on the internet. And because large language models specifically condense information from the internet, you end up bypassing a lot of Google specifically. The second thing is there's a lot of different vectors of attacking that, all of which are fronts that Google has to defend. Let me give you some examples. So the Rabbit R1 takes a lot of different apps and puts an AI layer on top of them. So you make one voice command and it will do all the searching for you and all of the interfacing to these different apps, like ordering an Uber, figuring out what to watch or what to listen to on Netflix or Spotify. And it will do those things for you and just return the result. So this is a device that purely exists almost to cut out Google ads. You go to Google, you type it in, you see a bunch of ads on your way to the answer to your question, right? Here's another example. Recently, Arc browser came out with a browser that browses for you. Sounds a little silly, but in essence, you say what you want and it populates a tab with the answer for you. So you would type in videos of Steve Jobs, and what you would get is a new tab that opens with the YouTube video of Steve Jobs and whatever keynotes that you searched for. What you didn't get along the way is all of the ads that Google serves you and the search results on your way to finding that video on YouTube. Here's another example. The Humane AI pin doesn't even have a screen. So guess what? You're not seeing whenever you use it. Ads. And the trend here is that generative AI and large language models end up cutting out the search part of getting you to the answer. So I think that's worth commenting on because generative AI is becoming more prevalent at the browser level, at the application level, at the device level, and I'm sure at every other level of the stack. So Google has to do one of two things here. They have to either come up with a much more elegant way to search, whether that's redefining what Chrome looks like, redefining what Google search looks like, redefining how websites show ads in the first place, or they have to use their Gemini model to their advantage and say, hey, we can either let these other language models disrupt us, or we can do it ourselves by coming out with the next generation of the internet. My guess is it's going to be some combination of the two, because the truth about Gemini is it is one of the best large language models out there. And Google wrote the original paper on transformers in the first place. So it's, if anyone should be seeing the writing on the wall and doing something about it, it's Google, right? That's my take anyway.
Yeah, I agree. And I think we've started to see Google come up with an answer. So I believe in like one of their keynotes, they started to show how generative AI can help with Google search results. You can have a bit at the top where it was trying to summarize the results and but they need to innovate quickly because like you said, I love the way you summed it up. Multiple attack vectors are honing in on Google. And that's kind of how business works. It makes sense because they have such a massive target on their back because they're all about advertising. So of course, people are going to try and disrupt that. Me and you, we don't have to pay for Google, but the advertisers sure do. They would want to reduce that cost as well. So it definitely opens up this whole world.
I think one of the great things about this for the consumer is regardless of which way you go, whether you replace your browser or you replace your device, the net result is just fewer ads for users, right? And I think if it's one thing that everyone almost on the internet can agree on is we don't like ads. So they have all the chess pieces on the board to do something with. They have the generative AI model. Again, Gemini benchmarks very well against GPT-4, GPT-4 Turbo, right? And if they don't address this, it's a huge failing.
We were asking this same question a year ago, right? We were going, look, Microsoft have got out of the blocks quickly. Google, over to you, your chance to respond. And they haven't really answered those questions. The questions remain. Now, the stock was down 6% after the earnings and it kind of sat there. It didn't bounce back like some others did. But I have to admit, I bought on the dip because I think ultimately, longer term, they have to be a winner in this space. They've got so much free cash flow to invest. They've got some of the brightest minds in terms of like their acquisitions of Google DeepMind, which I keep talking about as well. So they have got a lot of the pieces here. I do still back them to figure this out, but I've been saying that for maybe a year and a half. But when you see their ad revenue declining, that's unexpected. So at some point, they're going to really have to up their game. Otherwise, they will get left behind and Microsoft and others will disrupt them quicker than they're able to keep up. Okay, let's move on to the next mega cap tech company. And it was the former biggest, but not anymore. It's Apple. I'll just run through some of the numbers for that Apple reported. So the earnings per share, $2.18 versus $2.10, pretty much in line. The revenue was more than the street expected. It was just shy of $120 billion versus 118, call it, was expected. Gross margins were pretty much in line. And then in terms of iPhone revenue, that was above where the street was. So 69.7 billion versus 67.9 billion. They actually had 2% sales growth in their most recent quarter. Surprisingly, that was actually quite a turnaround because it broke a streak of 4 previous quarters where revenues were declining. And that's mostly been around iPhone sales not quite hitting the numbers previously for Apple. The main concern for investors was around China because the China revenue, which makes up about a fifth of their overall revenue, was down 13%. So this is one of those things. Is this just a one-off? Is this a trend? Is it continuing to go in that direction? We'll have to watch it over time. And in terms of their other product lines, this is something that blows my mind. Services from Apple were responsible for $23 billion in terms of revenue. So they've really done a great job of like reinventing their business line. We think of Apple, you think of products, but recurring services, SaaS, that's like kind of what the market wants. We've talked about the core products there. Very soon, I'm expecting we're going to have a new products to talk about, which is the Vision Pro. They might come in last into a market, smartphones, iPads, iPhones. They'll come in last, but it'll be the best.
Last but best has always been their strategy. My only concern with Apple is their revenue from China. We've talked about the Huawei and the Mate Pro in the past. We've talked about other phones that are encroaching on their territory. For example, the new Samsung Galaxy S24. So there's definitely stiff competition in the market for smartphones. One of the rumors in the mill right now is that iOS 18, which we'll learn more about this summer at Apple's next WWDC event, could have a lot more AI features in it than expected. And whether that means just AI features around the home screen to make different recommendations on which apps to open, generating playlists on the fly of media for you to consume, or whether that means specific enhancements to turn Siri into a legit AI assistant to compete with things like the Rabbit R1. It's clear that Apple needs to do something in the generative AI space because just like we're talking about Google search being in danger, I do think it's up to this current generation of smartphones to defend their turf by adding those AI capabilities into their existing devices, thus eliminating the need to get a new device. At the same time, I think Apple is really fighting a battle on 2 fronts. The iPhone is one front that we just talked about, and then the Vision Pro and mixed reality is obviously the other. So I'm curious to see how their ecosystem ends up moving into this new generation of generative AI plus mixed reality and spatial computing. Why I'm saying all that is because that should A, lead to more device sales, but B, lead to way more service and software sales down the road, which is their second biggest revenue generator right after the iPhone, right? So the combination of hardware and software on Apple's ecosystem is really what matters here. So I think they're in a great place, just like Google is, but they actually need to capitalize on that position. And I'm curious to see how they do it.
I think 2024 is going to be crucial to see what are Apple doing with AI, because we were talking a minute ago around how Google have been slow. Some people can argue Apple's done nothing in this space, right? Hey, Apple brought a Siri. Why is that not already enhanced with all this AI kind of? So is it that they're just waiting for the moment to come in and they're going to nail it with a product that just beats everyone? It will be really interesting to watch what happens with Apple in 2024. And I think AI, they have to have something up their sleeves. Surely they're such a massive company who've had so many successful product launches over the years. They know how to do digital assistants. No one's ever liked the Siri experience fully. Everyone's always been left wanting more. And it's not just Siri, it's been the other Cortana and Alexa. It's like, and I think if anyone can nail that in terms of a user experience that integrates with all the devices, like you just outlined, that's got to be Apple.
I think you just turned on everyone's cell phone and everyone's lights. So I'm not too quick to bet against Apple. And it's just a matter of how fast they can roll out these features, because generative AI is moving so fast still. By the time they get it in there, we could be having very different discussions about what large language models, large action models, large vision models can do in general, right? It could be a whole different world in 6 months, just like it's been over the last year.
I think the next one, we have to talk about Tesla. You did a whole video on Tesla. It was a disaster of an earnings call again. They missed on the top line. They missed on the bottom line. There were concerns around their operating margins. Their operating margins are like 8%, barely up from 7.6. But if we look at just a year ago, it was more like 16%. And Tesla, historically, it's been the operating margin is what set them apart from their other car competitors. So that's concerning. And what analysts really didn't like was when asked about like operating margins going forward and guidance, and Elon was so vague. That people just didn't get the clarity they needed. So we've talked about a lot about Tesla anyway. Is there anything else you wanted to just mention, Alex, on Tesla?
They have a lot of things going from them that separate them from other car companies. None of those are materially impacting the bottom line yet, right? FSD, still not real full self-driving. It's still level 2 autonomy. The robot, Optimus, still not exactly at the level of Boston Dynamics, let alone capable of being in people's homes, in industrial work environments, in factories, and so on. The $25,000 robotaxi. We were expecting robotaxis for years now. Still not here. I definitely agree that's still in Tesla's future, but the question is if, when, and how those things will materialize. The reason that's a question now, and it wasn't a question several months ago, is because this is the first time Elon Musk has really said that if he doesn't get a certain amount of voting rights in the company, he would prefer to build these types of products outside of Tesla. And what that means to me, at least, when I interpret that tweet, is he's not going to be building robots and AI inside of Tesla anymore. Then, in my opinion, Tesla just becomes another car company. Their margins already look like a car company. Their production volume rate of growth is going to slow. I don't want to hold a car company. So the question is, when are we getting clarity around whether Tesla is just going to be another car company, when all of these futuristic things that separate them from a car company are going to materialize, and whether Elon Musk is on board for the long term or not based on his compensation package? That's our current stance on it. We already don't cover Tesla that much. So I'm curious to hear everyone's thoughts on that, just based on the actual earnings call, whether you feel they should still belong in the Magnificent Seven after their recent downtrend quarter after quarter after quarter, or whether there's something we're missing altogether besides looking to a future that's always been there and just having more questions around it today. Tesla is definitely one of those stocks with a promising future, with the most questions around how they're going to realize it, even more than Google, even more than Apple, right? As opposed to a company like Meta, who had all sorts of questions, and then they said, you know what? We're going to pivot. It's going to be year of efficiency. We're going to double down on AI and productivity. They've completely turned it around, and that's already reflected in their earnings and in their share price. That's certainly not true for Tesla. So that's why we're comparing them directly, the opportunity cost of holding Tesla stock seems to be getting higher and higher and higher every quarter.
On Tesla, Alex, I'll give you the other side of this, right? Let's take the example you just gave, Meta platforms. There was a time last year where people were questioning Meta, the stock plummeted, there were activist letters, we were worried that everyone was spending too much on the metaverse. Fear, uncertainty, doubt. The stock price sunk, but at the core of their business, they had half the planet, as you said, using their apps. That was the time to buy Meta. So now, looking at Tesla, yep, there's a lot of fear, uncertainty. We're not sure about Elon. Is now maybe when we have the fear around the stock, is 2024 the year to accumulate Tesla stock at a lower valuation because people have some concerns? And if you do that, will you reap the rewards in future? I mean, that's the other side of the Tesla story.
If you believe that future is going to play out for sure, I agree with everything you said.
Let's wrap up the Magnificent Seven then by talking about NVIDIA. The reason we haven't covered NVIDIA today, who are part of the Magnificent Seven or the Super Six, is because NVIDIA earnings are not out yet. They'll be out in the coming weeks. We will then do a special podcast episode where we'll take a look at both Intel and AMD, who have announced, along with NVIDIA earnings, and we'll look at Qualcomm earnings as well, and do a summary of the state of the world of semiconductors in Q1 of 2024.
Yeah, I'm super excited for that. I think the chip market is going to be in a huge boom because of AI, and I'm curious to see how NVIDIA, AMD, Intel, and Qualcomm are all handling both the AI boom and this new mixed reality boom. So stay tuned for that. And with all that, thanks for watching. This is Ticker Symbol U. My name is Alex, and I'm joined by Arif, reminding you that the best investment you can make is in you.